Hi, this is Jeremy from Ross Automated Solutions. In this quick demo, I'm showing the COT Positioning Lab, a local research dashboard I built for reviewing commitments of traders' data across a focused futures market universe. This is not investment advice, it's not a trading signal or tool. The goal is to make positioning data easier to refresh, validate, and review. The dashboard takes CFTC Commitments of Traders data, processes it into a cleaner research data set, matches it to a configured group of futures markets, and then summarizes the current positioning backdrop. Instead of manually checking each market one by one, I can open the dashboard quickly and see whether the data is ready for review. The first thing I look at is the readiness section. Here the dashboard is showing ready verdict. The latest report date is May 26, 2026. There are a total of 590 rows, 12 matched, 478 unmatched, 0 questionable, and 12 configured. This tells me the dashboard output is clean enough and ready for me to use. The current configured market universe includes copper, corn, crude oil, gold, NASDAQ, natural gas, silver, soybeans, S&P 500, 10-year Treasury, US dollar index, and wheat. This is intentionally focused. The idea is to start with a small set of important futures markets and make sure the data is matching and review processes are reliable. The next section is the top positioning extremes. This view highlights markets where current COT positioning is furthest from its recent 156-week range or Z-score baseline. I use this as a starting point for research, not as a buy or sell signal. In the current dashboard, copper stands out. Commercial positioning is near the low end of its 156-week range, around the 1.9th percentile. Large spec positioning is near the high end, around the 98.7th percentile. In plain English, commercials are near one end of the recent range while large specs are near the other. This kind of divergence makes copper worth reviewing more closely, but context only, not a trade recommendation. I can also drill into selected markets, such as 10-year Treasury. This dashboard labels the current regime as commercial distribution. Commercial positioning is near the low end of its 156-week range with a 9.6 percentile reading and a negative 1.2 z-score. Large spec positioning is closer to the middle of the range, around the 41st percentile. Small spec positioning is at the very high end of the range, at the 100th percentile, with a 4.3 z-score. This gives me a structured view of the positioning backdrop in one market without turning into a trade signal. Thanks for watching. A link to the GitHub will be provided below.